Another video for CA final May 26, September 26, and Jan 27. This one is if you have losses, what do you do with it? Can you sell it off? Yes. Can you carry it forward? Yes. We'll talk about all that in this chapter. Plus, if you are under amalgamation and demerger, can you carry forward the losses? If you're a closely held company like a startup, can you carry forward your losses? If you're a father who had a business, now your son is inheriting the business, can he carry forward the business? All that and more, and two case laws will be discussed in this chapter called set off and carry forward the losses. First, the basics. If you sell it off in this year, it's called set off. If you carry it forward, it's called carry forward and set off. Section 70 and 71 mainly talk about set off, carry forward. Of course, there are other sections as well. First, there are five heads of income. The first one being salaries, where there can be no loss. The second one being house property, where there can be loss. You can set off within the family. The third one is PGBB. There are three kinds of businesses. One is called non-speculative, that is normal business. One is called speculative business, when you're buying and selling without taking delivery. And third is called specified business, like a hospital, like infrastructure facility development, etc. Now, let me tell you derivatives. If you trade in derivatives, they are normal business or non-speculative business. Shortcut is derivatives are normal. Then there is capital gain, long term and short term capital loss can happen. And then there is IFOs, which generally does not have loss because interest and dividend, how can you have loss? Unless it is owning and maintaining race horses, where you basically run horses on the race course, where you can have a loss. If your horse does not win, there can be a loss. Let's talk about first intra-head adjustment within the family. Salaries will not require it. House property, you can take help within the family and adjust it. Yes. PGBP also, but guys, speculative business and specified business are unique blood. What do they mean? If you have a loss in speculative business or specified business, those losses cannot be set off against other incomes, even in PGBP. Yes. Remember, in this chapter, the focus should be on losses and not on the profits. In capital gain, long-term capital loss, short-term capital loss, that long-term capital loss is unique blood. It cannot be set off against short-term. But the other way around, it can happen because short-term capital loss is not unique blood. And last, IFO is that owning and maintaining racehorses again is unique blood, and hence it cannot be set off against other heads of income. And even in IFOs, it cannot be set off. Remember, if there is any casual income like lottery, betting, online game, etc., no set off, no deductions, no basic exemption limit can be used against the casual income. If you get lucky on a big amount, the government also wants to get lucky on the full big amount. That's the logic. This is intra-head adjustment. Let's go to inter-head adjustment. That means one head talking to the other head. Of course, salaries will not talk to any other head. House property, yes, it can be adjusted against other heads of income, but only up to 2 lakh rupees. It is called friendly but shy. It can go to any head of income, but only up to 2 lakh. Remember, in the default tax regime is different. So I'll talk about this, and then we'll talk about the default tax regime ahead. Next, in PGBP, you can go and set yourself against any other income except salaries, because PGBP does not talk to salaries. That is a shortcut. Capital loss cannot be set off against any head of income. They are non-friendly. They don't talk to any neighbor, so they cannot be set off. And of course, all the unique bloods, whether it is specified business loss, speculative business loss, long-term capital loss, and owning and maintaining race horse loss, cannot go outside because they can't even go within the family to get going. This is called inter-head adjustment. Next, carry forward of losses. If your loss cannot be set off, you can of course carry forward. That carry forward can be happening for many years. Generally, it is 8 years. But if it's a speculative business loss where it's a gambling kind of a nature, then only 4 years. Owning and maintaining racehorses is also gambling, so only 4 years. And guys, specified business is so good that the loss can be carried forward indefinitely. Let's talk about carry forward loss. When you carry forward the loss, example, this year's house property loss, I carry forward to next year. Then next year, it cannot go outside the house property head of income. This is called quarantine stamp. When you carry it forward, only that loss cannot be going outside. So basically, they get a quarantine stamp. If a PGBP loss is being carried forward from this year to next year, then again that PGBP loss cannot go to other heads of income. Remember that. Next, some additional items. This is all different losses. You need to file a return of income. Only then your losses can be carried forward. Example, my this year's return of income has not been filed on time. So then what will happen? My last year's carry forward, no problem with that. My this year's set off, no problem. But whatever losses of this year which could not be set off cannot be carried forward because you did not file your return on time. This is a section called 80. Of course, there are two exceptions here. One is loss from house property, and one is unabsorbed depreciation. These two can be carried forward even if you filed your return late. Second, I discontinued my business. My business was not doing well. I discontinued it. Can I carry forward this loss? Of course, even a discontinued business loss can be carried forward. Next, if I have some casual loss, example, I went for some betting and I bought some lottery ticket of 7,000 rupees and I did not win anything. Can I set off that casual loss of 7,000? No. They say if you have income, you will tax that income, but this casual loss, loss from card games, loss from lottery, etc., will not be allowed to be set off. If the income is exempt, of course, set off is not allowed. Example, if your agriculture income is exempt, then if you have agriculture loss, that cannot be set off, nor can it be carried forward. First, you will do clubbing and then you will do set off. And set off can happen only of the same person. Example, my losses cannot be set off by someone else. Unabsorbed depreciation. Let's talk a little about that. If I have depreciation of 100 and my profit is only 20, then I can minus 20 and the 80 will become unabsorbed depreciation, which has two unique qualities called IQ. What is IQ? First, it can be carried forward indefinitely, there is no time period. And second, it does not get that quarantine stamp. That means I can take my unabsorbed depreciation next year to PGBP also and to outside also, of course, except salaries. And the same treatment and the same two benefits of UAD are also given to SRE, scientific research expense. Even they can be carried forward indefinitely and they can be going to any head except salaries. And the same treatment are also given to family planning expenditure. All are the same treatment. Next, if you are basically having a profit, let's say of 100, but you have many losses, you have depreciation, this year's loss, last year's loss, which is the order of set off? First, they say this year's loss first. So you'll minus this year's expenses first. If there is any carry forward of loss which has an expiry like 2 years, 3 years, etc., then that you have to minus. And then last things which don't have an expiry like unabsorbed depreciation, etc., you can minus. Now let's talk about the default tax regime. In the default tax regime 115 BAC, there are two big changes. First, if you have a house property loss, first of all, SOP, you don't get deduction of interest. So SOP will never lead to loss. SOP will number will be zero. That's first. Second, if you have a loss, basically from LOP, if you have a loss, that you cannot go outside your family. That means you can set off only within house property. One LOP loss, one LOP profit, can I set it off? Yes. But one LOP loss, can I go to other heads of income? No, sorry, that is not allowed. And third, even if you have a loss which cannot go outside, etc., you cannot carry forward. So it's a 1 year game now. So if I have a LOP loss of 70,000 and a LOP profit of 50,000, I will set it off. And what about the balance 20,000? Sorry, it cannot be carried forward. Next, in case of amalgamation and demerger, what happens? First, let's talk about amalgamation and demerger. If there is amalgamation of things like industrial undertaking, a ship, a hotel, a banking company, the shortcut is DISH BP. D is for basically disinvestment, I is for industrial undertaking, S is for ship, H is for hotel, B is for banking company, and P is a public sector undertaking. In these cases of amalgamation of these entities, the losses and unabsorbed depreciation will be allowed to be carried forward subject to 3525 condition. What is this 3525? You say that the amalgamating company, example, Vodafone amalgamated with Media. That's example. Then Vodafone's telecom business should have been there at least for 3 years, and that business will be continued by Idea for at least 5 years. So that's why 3 5. I'm reading. The amalgamating company should have been engaged in the business for at least 3 years before the amalgamation, and the next entity should carry on the business for at least 5 years. And second is 2 5. These are conditions. That is, the earlier company, that is Vodafone, should have at least three-fourths of the book value of fixed assets. That means they should not get rid of the fixed assets. At least three-fourths of the book value of fixed assets should continue, should be held by them for 2 years before the amalgamation, and by the next entity should be held by at least 5 years. And only for industrial undertaking, this next condition is only for industrial undertaking. Example, let's say Vodafone Idea is not the case. Let's say Samsung buys over some industrial undertaking of Micromax. Then whatever Micromax's capacity to manufacture is, basically installed capacity, they have to reach 50% of that installed capacity within 4 years, and they have to keep that up for 5 years. So these are some conditions for amalgamation and demerger. In that case, set off to be carried or losses to be carried forward. And from 1st April to 2025, so this is an amendment. In cases of losses of set off and carry forward, amalgamation and demerger, the losses can be carried forward only for the remaining years. Example, the Vodafone has already had losses for 2 years, then only the balance 6 years can be carried forward by Idea. Let's talk about now demerger. Since amalgamation is done, remember 3525, remember now demerger. If the demerged entity has a loss and that demerged entity has gone to the next entity now, then that loss can be carried forward. If the demerged entity does not have any loss and the overall company has a loss, then it has to be proportionately given to the next entity based on value of assets. Now there is a change in constitution of a partnership firm or there is succession. Example, guys, partnership firm is A, B, C, and generally partner C dies. Now, if partner C dies, what happens to the losses? Then we will do proportionate based on his profit sharing ratio. Example, the loss of the company is 9 lakh rupees, and each of the three partners had one third share. That means one partner's share of loss is 3 lakh. That 3 lakh, we will assume that it's gone with the deceased partner or the partner who is retired. Unfortunately, that cannot be settled. But that does not apply to unabsorbed depreciation. So this concept only applies to accumulated losses. And if there is succession, what is succession basically? That means Mukesh Ambani was doing a business. Now he is retired or he is no more. So Anand Ambani or Akash Ambani will do the business. That's called inheritance. If it's succession by inheritance, then loss can be carried forward. But if it's succession because of sale, etc., then loss cannot be carried forward unless it is amalgamation, demerger, one of those conditions. So I'll give you an example. A father died and his three sons made a partnership firm and continued the business. Can the losses be carried forward? Yes, because even though they made a partnership firm, it is always succession by inheritance. Next, closely held companies. Closely held companies basically means a private company. In a private company, can losses be carried forward? Yes. There are two conditions. One, it is not an eligible startup, means it's any normal private limited company. Example, a company manufactures calculators. If it's a private company which manufactures calculators, and if it has a loss, can that loss be carried forward? Yes. Generally, what happens is people try and sell their loss. I have a loss in a private company. I will sell my company so that the other entity can set off the losses. So the government to disassociate that or discourage that, the government says, okay, you're a private company, you're a closely held company, you have losses. That losses can be carried forward only if one condition is fulfilled. The year you are going to set off the losses, at least 51% of the shareholding should continue. Example, in this year, there were some shareholding, let's say A, B, C, D were shareholders, and now more shareholders have come, but at least A, B, C, D should continue holding at least 50%. The year of the loss and the year of set off, both shareholding should be common for 51%. And if you're an eligible startup, that means, guys, there's a definition of eligible startup, which we will see in section 80 IAC in a chapter called deduction, which is obviously the next chapter. But in that case, if you're an eligible startup, then there are two conditions. The year you had the loss and the year you're going to set off, 51% shareholding should continue. Okay, that means A, B, C, D should have at least 51% shareholding, even on the day they are setting off the losses. But guys, the one more condition is that all the A, B, C, D should continue. It should not be that they have gone out of the firm of the startup and the other people have come in. No. So all the shareholders who are on the year of making the loss should also continue to be shareholders in the year when their set off is going to happen, unless the shortcut is that gone bankrupt and suspended. That means unless the shareholding has changed due to death of a shareholder, due to amalgamation, due to any strategic disinvestment, the government reducing the stake, due to any gift to any relative, due to bankruptcy, or due to suspension of the board, like Yes Bank's board was suspended. In this case, if the shareholders do not continue, that's okay. Otherwise, guys, the shareholders should continue, and not just for 1 year, they should continue for 10 years. Only then these eligible startups, guys, will be allowed to be carry forward their loss. And guys, if the government catches you in a raid, in a search, in an inspection, in a seizure, if they catch you, and in that case there is a loss which is discovered, that loss will not be allowed to be set off or to be carried forward. Let's move on to two case laws. KBD Sugars and Distillers 2023 Supreme Court case law, very important. The resulting company, that means a new company, can they set off and carry forward the losses of a dysfunctional unit of a demerged entity? Yes. The demerged entity, because it is dysfunctional, only they will demerge. No, one of the reasons. So that loss can be carried forward, definitely yes. And can the loss suffered by erstwhile partnership firm, which was dissolved, be carried forward by one of the partners? No, because this is not succession by inheritance. It has to be succession by inheritance. Only then it can be carried forward. All right, so this is where we are. Guys, just recapping. Many things are from interior, but the new things are 3525 for amalgamation, demerger, closely held companies, which is not a startup, and closely held company, which is an eligible startup. How do we work around that? And when a partner retires from a partnership firm, he has to carry forward, take away the losses, but he cannot take away the depreciation. And in case of succession by inheritance, those are some of the new things that happen in this chapter. Once you finish this video, you can go through your notes for whichever book you're referring to and look at the sums. All the best. See you in the next video.